The bill has been lying in President Zuma's in-tray for 19 months and will devastate the sector, the report says. Specifically, it's about Section 20D and the move to take 50% plus one vote of foreign-owned companies and sell it to locals. It's likely to affect everyone from equipment manufacturers, suppliers, distributors and installers to service companies.
The foreign investors into our industry are likely to be forced to disinvest at fire sale prices. Our sector would take a giant leap backward in terms of technological and human capital progress, and I think one of the major negative ramifications for the South African economy will be the risk that that would pose to South Africa's continued participation in AGOA.
The impact could be as high as 133 billion rand loss in GDP and more than 50 billion rand loss in taxation revenue, apart from several 100,000 jobs that could be fall by the wayside.
It's something the country can ill afford, and business confidence is at record lows as it is, according to the latest data released by SACI today. The index was last at these low levels in 1996.
It's just it scares off potential investors, and your guess is as good as mine what will happen if the big security boys are out of the country.
The proposed legislation seems to contradict existing trade practices.
But really a bad piece of legislation because it goes totally against the grain of international trading relations, the general agreement on trade and services. We are bucking the trend. It's sending out the wrong signal to foreign investors.
There are other hidden consequences should this bill see the light of day.
One aspect, for instance, is the likelihood of a credit rating downgrade, and that will obviously be followed by a bond yield increase. We have run this through the model as well, and it indicates that within the next 12 months, worst case scenarios, that we could lose up to 10, or it would cost government almost 10 billion rand more in debt servicing costs. We don't have that type of money right now.
Once again, unintended consequences of government legislation are probably going to impact negatively on the investment climate in South Africa. Hopefully, sanity will prevail. I'm Angelo Coppola for CCTV in Rosebank, Johannesburg.